Good morning and welcome to Chaikin PowerFeed, your daily market digest. Today is Thursday, August 30th, 2018. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. PowerFeed TV brought to you today and every day by Chaikin Analytics in conjunction with Stock Charts TV and StockCharts.com. And you can sign up to receive PowerFeed for free. Head over to www.chaikinanalytics.com/PowerFeed TV. So markets extending into all-time highs territory yesterday. It's a relatively quiet session overall, obviously in the week leading up to Labor Day weekend. A lot of people are out on vacation, but that doesn't change the fact that price went to an all-time high. Treasuries were mixed with some curve flattening. Dollar was stronger against the yen, but lower against sterling following some Brexit headlines about an EU partnership with Britain. Gold finished down 20 basis points. Oil was higher after a larger than expected U.S. inventory draw. We'll take a look at crude here today. It settled up 1.4%. Breadth on the New York Stock Exchange, positive 1.5 to 1. Breadth on the NASDAQ, a positive 1.6 to 1. But as we get to the desk this morning, futures are down 20 basis points. Asia was mostly weaker overnight, with China leading to the downside, falling over 1%. European markets are on the defensive. Treasuries are a little changed. Dollar is slightly weaker versus the yen, slightly firmer against the euro. Turkish lira coming under some more pressure today. Gold off 30 basis points. Oil extending to the upside, up 40 basis points. And as we look at the market, there it is, closing at an all-time high. Support is at 2873, 2800, and then 2726 is your rising long-term trend line. And I finally get to change the tune and say something different this morning. The RSI has become overbought, and its new high confirms the price action. Just barely so, 71.89 on the RSI. But as you can see, for the first time in a while, a price high was met with a momentum high. That is what I refer to as confirmation. That's what I'm looking for. Obviously, the RSI remains in bullish ranges. Chaikin money flow indicator is bullish. For all intents and purposes, this has really played out exactly as we were expecting. Consolidation within the context of a secular uptrend that likely resolves to the upside. What we want to see now is a hold above that 2873, 2875 level, the breakout. And then we'll start to think about a measured move and potential upside targets. But the bullish confirmation is really important. And the fact that the RSI, through all of the pullbacks, really since the end of March, through all of these pullbacks along the way, the RSI never became oversold. And that was a key indicator for our bullish call. Your market in a minute. This is what I'm talking about today. Today's also Thursday. I talk about breadth, but I'm not going to belabor that one because really nothing's changed. Stocks register another all-time high. Large cap technology stocks lead the way. We'll take a look at the cues. Oil continues to move higher. I was actually on Bloomberg TV yesterday and asked to talk about oil, and I spoke about it in a bullish way. So nice to see that moving higher. Retail stocks remain leadership. And as I said, I'll touch on it briefly here. Market breadth, the advanced decline line made a new all-time high this week as well. Checking out the power bars, really bullish across the board. Dow 8 to 1, S&P 500 sees a more positive skew, 136 bullish or very bullish stocks for 61 bearish or very bearish stocks. Nasdaq skewed more than 3 to 1. There is your large cap tech leadership. Small caps still underperforming and actually seeing a little bit of deterioration, but still bullish. Bonds tick up about 13 basis points. Consumer discretionary, big leader. But one of the things that I've been focused on, and I'm drilling down and doing a lot more work, and I've started to talk about it here a little bit. I've started to talk about it in some of my notes to Chaikin Analytics clients. Consumer discretionary price leadership is masking some deterioration under the surface. The fact that Amazon is a 25% weight in the consumer discretionary index is dragging that higher. Amazon was up over 3% yesterday on the back of a price target increase by a major Wall Street bank. I believe it was Morgan Stanley. And that is really pulling the group higher, that along with retail. If you look under the surface, though, if you look at the hotels, if you look at leisure, if you look at media, if you look at autos and auto parts, there are some troubling signs there. So stock selection within consumer discretionary is really important. So according to the Chaikin Power Bar, large cap stocks and small cap stocks are bullish. Major indexes are mixed. Our stock of the day today comes to us from the Computer Software and Services Group, which I love so much. This one is Momo Inc., and it is an ADR. It's Chinese listed. It's a Chinese-based company listed here in the U.S. Closed at 47.56, down 21 basis points. Has a very bullish Chaikin Power Gauge rating for ticker symbol MOMO, and that Power Gauge rating is very bullish due to very strong earnings performance, very strong price volume activity, and attractive financial metrics. Stock does have some negative expert activity as well. We're going to take a look at it here. With the caveat being, it is a foreign listed company. Some folks don't like to trade those, and that's fine. But we'll walk through our process regardless. Very bullish stock, strong trend, strong industry. Here's our very bullish rating, but we are not outperforming the market yet. The market is not in agreement with our model yet. The dynamic duo is not in gear. Add to that the fact that Momo is overbought based on our proprietary overbought, oversold indicator. Money flow has been predominantly bullish since February. This slight blip on the downturn here. You can see this yellow dot. This means that I have a note. We have note-taking capabilities in Chaikin Analytics. I've actually been watching this name for a while on this pullback and then move higher. What I'm looking for here now is a stabilization above $45 with money flow remaining bullish to work off this overbought condition. And I want to see this go back to leading the market. Should that happen, this would be a compelling setup on the long side. But for me, it's not there yet. I would add this to a bullish watch list. Obviously, I have it on one because I'm taking notes on it and monitoring it on a day-to-day basis. I think Momo is an interesting name. I just don't think it's interesting here and now. There are probably better opportunities, but add it to your bullish watch list and keep an eye on what's happening with Momo. Sector tracker, looking at the movement over the last 5 days. Tech has been leadership, up 3.26%. Discretionary, we talked about that. Materials, seeing a little bit of a counter trend move, up 2.3%. I do think it's counter trend in nature. I haven't seen enough technical evidence to lead me to believe that that trend is changing on a relative or absolute basis. Add to that the fact that the material sector's power bar ratio within Chaikin Analytics is the worst of the bunch. I don't feel compelled to buy strength there. As a matter of fact, I'd be more inclined to fade it. Healthcare, rounding out the outperformers. Real estate, looking for that relative bottom. Staples continues to be a laggard after the rally that it's had. And you've heard me call Staples the move in Staples counter trend in nature. If you've been fading it, I think that that's been the right play. I want to continue to do so. Utilities trying to form a relative bottom as well. And really financial is the only group that's troubling me at the moment. I want to see this group really become leadership as the second biggest weight within the S&P 500. But right now the big group is doing the heavy lifting, right? Tech is 26% of the S&P 500, and it is outperforming. So that is a positive. And our industry in focus today is something that we call innovative tech services. Its Chaikin Power Bar ratio is skewed to the bulls, 25 bullish or very bullish stocks for 14 bearish or very bearish stocks. And over the past 6 months, the innovative tech subsector has outperformed the S&P 500 by nearly 9%. Power Bar ratio, which measures future potential, is strong, and it's currently ranked number 11 of the 21 subsectors that we track. And some of the indicative names there, Checkpoint, which about 2.5 weeks ago was one of my bullish stocks of the day. That trade's working out well. CyberArk, really good name within the software space, in particular around security software. So let's continue to keep an eye on those names. What I will say is within Chaikin Analytics, both of those stocks are currently overbought. One that does look interesting to me, though, is Yelp. You've probably all used the product. It's widely helpful if you're looking for something to do or looking for reviews on businesses and services. I use it all the time, quite frankly. It's a very bullish stock with a strong trend and a strong industry. Here's our ribbon at the bottom of the page that tells us where that power gauge is currently and where it's been over the past 12 months. And what we see here now is that after underperforming the market for about 2 months, we are now outperforming the market. And the catalyst for that outperformance was a positive earnings surprise. These earnings surprise catalysts are really important because to me, it tells you that that report changed sentiment, right? Because look here, positive earnings surprise, gap lower, stay in the range. Positive earnings surprise, Gap lower, stay in the range. Positive earnings surprise, really do nothing. The stock's been in a range for most of the past 12 months, and arguably we're still in it, but this power gap higher is the first time in the past 4 earnings reports that the stock gapped higher on the print. That's a change in investor sentiment and something you want to keep an eye on. Stock is closer to oversold than it is to overbought. Money flow is bullish. Stock is above a rising long-term trend line. I think Yelp is compelling for a trade here. Closed at 46.99, up 53 basis points yesterday. Take a look. If you're a breakout trader and you want to wait until we cut through 50, fine. But I think Yelp looks compelling here and now. Trending, yesterday's S&P 500 movers and shakers. MRO up 5%. Regeneron, 2 weeks ago, Regeneron was my bullish stock of the day, and that trade has worked out, up 4%. Abiomed, this is something that's concerning to me. Abiomed has been a leader. If you look at the chart of Abiomed, it's been nothing but up and to the right. But our model recently went bearish on it. Stock pops 4%. Maybe you want to use that as an opportunity to get out of some if you have it, given the bearish nature of our model. Amazon has a neutral rating within Chaikin Analytics, but as I said, it was Morgan Stanley that took up their price target yesterday, and that led to about over 3% advance in the stock. Foot Locker rounds out the top 5, going up 3%. On the downside, Tiffany's earnings were not enough. They disappoint the street. Stock down over 4%. BWA down 2%. Neutrally rated stock. WDC, a large cap tech stock that's down 2% on a day when large cap tech is leading the tape, tells you everything you need to know. You probably want to avoid that. It's neutrally rated anyway. Take a look at Western Digital if it's in your portfolio. Kohl's still seeing some volatility following their print, down 2%. Yesterday's surprises, Salesforce.com beat by 23 cents last night after the close. However, the street was not happy with the bookings guidance going forward. That stock down about 3% in the pre-market. Express beats by 4 cents, and At Home Group. I'm not deep in the weeds on this company. It does have a bearish rating, and looks like they missed by 48 cents, so probably nothing to do there on the long side. Reporting today, Ulta reports after the close, our bullish rated stock that's reporting. Campbell Soup reported this morning, and that stock is trading down 3%. A lot of moving parts there. Campbell's really is a special situation. They're selling off some divisions. Kind of hard to get a gauge on that one at that point. Neutrally rated stocks, Dollar Gen and Dollar Tree before the open, COO after the close. And as always, we suggest caution when holding bearish stocks ahead of earnings. So let's go to kind of the key points. Here's large technology stocks leading the way, and I'm using the Qs here as my proxy for large cap technology. And look, up and to the right, this has been a phenomenal trend for the past 2 years, above the rising 200-day moving average. If you want to make the case that we're extended, I'm not going to argue with you, but momentum confirming. Even during the January, February sell-off, the Qs never became oversold, and now they're really powerfully within bullish ranges, and actually it got overbought yesterday. So that's momentum is with the trend. Money flow is with the trend. I guess the only argument you could really make here, if you wanted to argue the bear case, was that we are extended from the 200-day moving average. And, all right, that's fine. Maybe we see a healthy pause or even a pullback back to the 180, 182 half level. I'm not going to argue with that. This trend is up and to the right. There's really no reason to fade it. Oil continues to rebound. So I was invited on Bloomberg TV yesterday for a session called Charting Futures, and I talked about the potential for oil to take out these July highs. We're above the 50, above the 200-day, above support in the 64, 65 range. RSI trying to shift back into bullish ranges. Chaikin money flow predominantly bullish for most of the past year. No reason to think that oil is going to crack here and now. I like oil to the upside within the energy complex. I like E&P, and I like the refiners, not so much the services companies. I do think stock selection is important. And here's retail remaining leadership. This is the XRT. Spider S&P retail ETF up and to the right as well. Nice bullish hammer yesterday. If you're a candle pattern person, bullish hammer there. Here's the trend relative to the SPY. Solid uptrend, outperformance. And here's money flow into XRT. It's been solidly bullish since May. I've dubbed it the retail renaissance. I think you still want to go hunting for quality names within the retail space. One that I'm highlighting today is Ross Stores. So I thank everybody for joining. Head over to ChaikinAnalytics.com to sign up for PowerFeed TV. I hope everybody has a great Thursday. Thank you, Stock Charts, for hosting. See you back here tomorrow at 9:15. Have a great day, everyone.